This video is for you if you want to learn more about the world of Tesla stock splits. Tesla's stock split 5-for-1 in 2020 with a $2,000 per share price. It divided 3-for-1 for $900 per share 2 years later in August 2022. However, what if I told you that the 2024 stock split might be the next one? What if there was a way to use the information of the stock split to strategically buy shares in order to cash out? Before we begin, please remember to hit the like and subscribe buttons and to tell your friends about this video if they're interested in earning a significant amount of money. Should we get started now? It's crucial to understand that a stock split and a share buyback are not the same thing. By splitting a company's current shares into several shares, a stock split effectively lowers the price per share while maintaining the company's total value. In contrast, a share buyback occurs when a business buys back its shares from its owners, so lowering the total number of outstanding shares and raising the value of each share that is still in circulation. In recent years, Tesla has split its shares and repurchased others. In August 2020, the company's first stock split, a 5-for-1 deal at a price of $2,000 per share, took place. August 2022 saw a second stock split, this time for $900 per share, splitting the equity 3-for-1. Given that some investors found it difficult to participate in Tesla due to the higher share price prior to the splits, the purpose of these stock splits was to increase the accessibility of the company's shares to a larger pool of potential buyers. Regarding repurchasing shares, Tesla has carried out multiple similar transactions in the last few years. The corporation declared in March 2019 that it will repurchase shares valued at $2 billion over a 2-year period. This was considered as a means to restore value to shareholders as well as to demonstrate confidence in the company's long-term prospects. Tesla announced a second share repurchase program in February 2021, this time for up to $5 billion worth of shares. And it's hard to predict for sure if there will be another stock split in 2024. Companies usually announce stock splits in response to a range of circumstances, such as the state of the market, the price of the company's stock, and the company stock objective. Although it's conceivable that Tesla will announce another stock split in the upcoming years. It's impossible to say for sure right now. It's important to keep in mind that buying shares deliberately in order to cash out after learning of a company split is a risky and speculative tactic. When a firm will announce a stock split, it is impossible to forecast with any degree of precision. And even if it does, there's no assurance that the price of the shares will rise further after the announcement. Prior to making any judgments, as with any investing strategy, it's critical to conduct in-depth research and take all pertinent elements into account. There are a few intriguing details regarding how Tesla handles its stock splits to think about before we dive into estimates and numbers. As I've already stated, when Tesla split its stock for the first time, each share cost $2,000, is about $1,000 per share. The second time, this implies that the business would rather stay away from 4-digit stock values. What could possibly motivate a firm that owns shares to desire 4-digit stock prices? Google and Amazon split their equity 24-4. But that doesn't make sense. Shares worth thousands still exist. Rather, it is anticipated that the next Tesla stock split would occur at a price per share in the mid-hundreds, or about $800. Another intriguing information is that the corporation doesn't want the price of shares to fall below 200 following stock split. Given that the bottom end of its range is approximately 300, this is an important statistic to take into account going forward. Although it's anticipated that there will be closer to 20 million new cars on the road in 2030, initial estimates put that figure at 14 million. Since we don't know how many customers are paying the full FSD cost each month or what our RSD subscription numbers are, we'll start with an EPS estimate of $45 for 2030, assuming that 15 of newly sold vehicles will convert to or pay for the full FSD amount. While some might view that as bullish, Tesla's results from earlier in the year might surprise us. We already have the answer for 2020 at a P of about 50 by calculating the stock prices and the date of the stock split. Even though we're still in a bear market and the P for 2023 is currently about 60, that's still a really good P. Please click the like and subscribe buttons if you're interested in learning more about Tesla stock splits and the company's production and delivery data estimate. Many factors, including as market movements, interest rates, inflation, and Fed policy, are involved in determining Tesla's future. Despite this uncertainty, I believe that by the end of this year, or at least halfway through, we will be in a bull market and that Tesla's P for 2020 and 2023 will be around 50. Back projects, stock price of about $370 per share in the future, which would give the business a ridiculous P of 74 and an estimated valuation of $1.24 trillion. Even while I believe a more realistic P of 50 would place the stock price at 400. There's always a chance that in a bull market, the market could get irrational and push prices higher than they truly should. Fear and conjecture can influence buying and selling decisions more than true fundamentals. Even while companies like Netflix, Tesla, and Meta are money makers, if fear takes hold, their stock values might drop by 80. In the event that Tesla splits its shares, the price per share might fall to about $200, which will raise the stock price by a factor of 4. But I believe that after a stock split, the price of the stock will probably drop to about $40 per share in 2026 and 70p in 2025. Unless there's a significant invention that propels Tesla equities to higher levels. I don't see Tesla's P climbing much past the low 20s for the remainder of this decade and the first half of the next. For the next 10 years, I estimate that the average P for this ticket will be in the mid 50s. And for the next 10 years, it will be in the low 30s. When is Tesla going to divide its stock? Although it's difficult to predict with certainty, my goal is a P of 60 with $300 per share in 2023. By 2024, the stock price should be approximately $400 with a P of 50. With a P of 45, the price may fall to $45 in 2025, while with a P of 40, it may reach about $700 in 2026. Considering all of these predictions, I think Tesla will have at least 2 significant stock splits in the upcoming years, maybe even as early as 2024. Based on growth, I feel rather confident in my predictions and interested to see how they pan out in reality, even if it is impossible to foresee the future with absolute precision. Although some analysts believe this, it is quite improbable that Tesla will divide its shares very soon. Rather, the next chance for a split might come when the stock hits 500 to 600 per share, which might happen in the early part of the 2030s or at the end of this decade. Anywhere between 2025 and 2027 would be a good time to divide, but I think 2026 would be the best. We'd also like to mention this to anyone considering purchasing right now in anticipation of a repurchase occurring during a stock split. An investor's assets have the same overall worth, even though there are more shares and a commensurate drop in share price. As a result, the quantity of shares required by an investor to profit the most from the stock split will vary depending on their investing objectives and the split's particulars. An investor who had 100 shares prior to the split will now possess 200 shares following the split, for instance, if a corporation announces a 2-for-1 stock split. However, their holdings will continue to be worth the same amount. An investor's holdings will be worth twice as much as they were before to the split if the stock price doubles following the split. Generally speaking, during a stock split, holding more shares may potentially yield a higher return on investment. However, it's crucial to keep in mind that investing carries dangers and that success is not guaranteed. Furthermore, before making an investment, investors should take the company's prospects and overall performance into account. Stock splits are not the only element that impacts a company's share value. It makes sense for Tesla to maintain its stock price at 3 figures in order to make it more affordable for the average individual, even though stock splits are unpredictable in the upcoming years. Let's wait and see how successfully this forecast comes to pass. I have a good feeling that it will hold steady. I appreciate you seeing. Remember, subscribe and like this material if you liked it. We appreciate your patience once more, and we hope to see you in the future video.